ACP on top and Aphria right next to that shit in the second slot. I'm like Jordan in his prime, shooting with Pippen, making money all the time, fucking with some mid-man. Kush bottles ain't going nowhere, you know it's gaining hype, and if you ain't watching, you ain't winning. It's time to say goodnight. Xena with the fever, that shit diva with the heater. You can leave that shit with Beaver. I don't fuck with non-believers. I got fire in my pocket, make my way up to Supreme. If you bet on this company, you gon' make some cream. XLY, I got lots of that. It's about to pop in fact. I ain't gotta stop the rap to tell you that you copping that. Vivo, I buy that in my Speedo, with eyes closed, eating a burrito or eating on some fucking Cheetos. Yeah, you know you buy that shit. It's a new strike on these haters, and the missile get you hit. Yeah, bow down, I ain't a hater like you. Bow down to a greater trader than you. Bow down, I ain't a hater like you. Bow down to a greater trader than you. Yeah, full alert, it's full alert. Yo, full alert, it's full alert. Full alert, it's full alert. Yo, full alert, it's full alert. You in the fucking building.
Good morning, this is Rich from Rich TV Live, and we got some good news. Aphria is about to report their results on some record-breaking revenues. It's true. Record-breaking revenues for all of the sector, and Aphria gets to be the hero right now in a sector that has been obliterated. It's true. The sector has been completely obliterated, and Aphria is about to report record-breaking revenues. The press release already came out. Let's see if we're showing what the pre-market looks like right now. Let's see. Let's take a little look-see. Are they showing pre-market? Don't want your trading signals. Anybody know what they're trading at pre-market? I'm not seeing any pre-market here. I'd love to know if you guys know what they are trading at pre-market. Not seeing anything here yet on TradingView. I'm not seeing anything yet on bar chart. I don't know why. But I heard pre-market they were up as much as 20. Oh, look at this. They're up 14%. Here we go. So this is the American symbol. It has moved up dramatically from $4.36 to $5. It is now up 15%. Pre-market on the news, which you're about to hear in 9 minutes. Okay? So we're about to go live with it. We are signed in. We're part of the media. If you guys didn't know this, Rich TV Live is part of the cannabis media. We are a true cannabis enthusiast, have been since day one. That's why we wear all the all the gear and apparel. As you can see, we are a real High Times investor. This is the Organogram, one of their subsidiaries, their symbol. Big fan of Organogram, big fan of High Times, big fan of Aphria. And Aphria just might. They just might have a huge day. And who knows? This could signal the turnaround for the sector. It would be nice to see the sector turn around because we've been getting beaten and battered for 7 months straight. Enough is enough, okay? Enough is enough. As cannabis enthusiasts, we deserve a chance at freedom. We deserve a chance at success. And Aphria may be the catalyst that takes us there. Let's listen in. Oh. Nope. No. They're still playing music. It was up 22% 30 minutes ago. I wouldn't be surprised to see it rip up a lot more during the market activity today. This is going to be good news. This is going to circulate. People are going to get excited about this. 126 million is pretty huge number considering Aurora couldn't hit 100, Canopy Growth couldn't hit 100, and Aphria just hit 126 million. 126 million reasons to like Aphria right now. So bar chart says they're 100% sell. This is why I never trust bar chart. It's a lagging indicator. It tells you what they did in the past. It cannot predict the future. Bar chart cannot predict that they were going to crush their earnings. That's why bar chart still has them as 100% sell. This is why, indicators are good, charts are good, but they don't predict the future. Only Rich TV Live predicts the future. And if you've been watching, I've been predicting that Aphria would show strong results. I've been watching the CEO, and in every single interview, he made it very clear that they are on pace to hit the numbers that they set forth for themselves. And congratulations, Aphria, for not over-promoting and under-delivering like a lot of your peers have. Congratulations for under-promoting and over-delivering unlike your peers. Congratulations. That is the way you do it. You under-promote and over-deliver. You don't over-promote and under-deliver. Now, there was some people that said that they thought it was going to be around 132 million. They came in at 126 million. That's only 6 million off. Don't tell me that they didn't hit their targets. I don't like to hear that. Whatever, those are consensus estimates. I'm happy to see the number. I think it's going to be a record-breaking number, and from what I've heard, and I'm excited to hear what they're going to say in about 5 minutes. We will be live, and they're currently up to $5.02, 15% up. Pre-market, this is good news for Aphria. Hopefully good news for the entire sector. Let's listen in. No, elevator music still. Still elevator music. Still elevator music. Still elevator music for everybody that's interested. I'll be watching them on TradingView as the market opens up today, so we'll see how they do, how they perform. We'll take a look at the one-day chart. We'll pull that up, and we'll watch it very closely. And they are now up 15% pre-market. So we'll just watch the pre-market to keep our eye open on it. Mr. Joe Fly says, I got call option on Aphria. Can't wait to see how much money I'm going to make at open. Hey, good move, Mr. Joe Fly. Very smart. Very smart. So we should be live in 4 minutes. The elevator music is in full effect. We should be live any minute. Stay tuned. Stay tuned. Wow, it's at $5.06 now. I like it. Yo, please keep me updated in real time with the price. Let's stay live with it. It's early here, guys. It's not even 6 a.m. I'm doing the early duty for the people because as a cannabis enthusiast, as the real original OG of being a cannabis enthusiast since day one, nobody has brought you guys more content than your boy, and nobody will ever bring you more content than your boy. We are here when it's red. We're here when it's green. We're here when there's bad days. We're here when there's good days, and we're here to break it all down for you guys live and interactive. Let's listen in. Oh, elevator music. Lots of elevator music. Gotta get rid of that elevator music. Like, seriously. Come on, guys. Edberg Dizon says, I'm so hyped right now, I don't even own Aphria shares. Well, I think for anybody who either owns Aphria shares or just owns shares in cannabis companies, this is good news. It's something we've wanted. It's something we've been waiting for. It's something we needed. And I'm quite excited about it myself. All right, we're going to go live on LiveMe. Let's get LiveMe set up here so we can be live on 2 platforms at the same time and streaming for everyone in the world to see. It's just kind of what we do. It's what we do best. All right, dismiss. Aphria Q1 results 2020 live. Whoa, that was weird. And share on broadcast. All right, we're gonna do that. We're gonna go live on Instagram. Aphria Q1 2020 results live. All right, we got a lot of platforms we go live on, guys. So we're about to do that again, and we're gonna hit that there, hit that there, hit that there. There we go. Hi, LiveMe. How you guys doing? This is Rich from Rich TV Live. Oh, still elevator music. We should be live any moment with the Aphria Inc. first quarter 2020 reporting results, which we will be live, and we're live on YouTube. We're live on LiveMe, which is streaming through Instagram. And it should be live any moment. I'll just keep listening in until they go live. It is 6 a.m., so we should be live any moment. This music is too much. This elevator music's too much. Yes, the stock market opens in 30 minutes. Is Aphria bigger than Aurora? It's a good question. Well, their results show that they are at this moment. Aphria's up. That's what's up. Aphria's up pre-market. We got Aphria up on the big news that they crushed their results. Crushed them. Aphria's up 15% pre-market right now on news that they crushed the results, and we're about to go live with it.
Good morning. My name is Denise, and I'll be your conference operator today. At this time, I'd like to welcome everyone to the Aphria Inc. Q1 Quarterly Investors Call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you'd like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you'd like to withdraw your question, press the pound key. Thank you. Katie Turner, you may begin your conference.
Thank you, Denise. Good morning, everyone. We appreciate you joining us to discuss Aphria Inc.'s financial results for the first quarter ended August 31st, 2019. On today's call are Irwin Simon and Carl Morton. Jim Myers will also be available for Q&A. By now, everyone should have access to the earnings release, financial statements, MD&A, and investor presentation, which are available on the investor section of Aphria's website at aphriainc.com. The financial statements have been filed with SEDAR and EDGAR. Before we begin, please remember that during the course of this call, management may make forward-looking statements. These statements are based on management's current expectations and beliefs and involve various known and unknown risks and uncertainties, which may prove to be incorrect, and actual results could differ materially from those described in these forward-looking statements. Please refer to the text in Aphria's earnings press release and financial filings issued today for a discussion on the risks and uncertainties associated with such forward-looking statements. And now I'd like to turn the call over to Irwin Simon.
Thank you, Katie, and good morning, everyone. We appreciate you joining us today to discuss our first quarter financial results. Our team has accomplished a significant amount to start the year, both in Canada and internationally. For the first quarter, our results were in line with our expectations, and we're on track to achieve our annual guidance. We believe our financial results truly sets us apart from our peers in the cannabis industry. Adult use cannabis net revenue increased 8%, with a fourfold increase in consolidated adjusted EBITDA as compared to the fourth quarter. We ended the quarter with a strong balance sheet and a cash position including $464 million of cash and marketable securities. As they say, cash is king. Our cash position and balance sheet will continue to differentiate us in the cannabis industry. We remain focused on the highest return priorities for growth. Our first quarter results demonstrate our emphasis on sustainable, profitable growth. Since I joined Aphria, our focus has been on profitability, a strong cash position for growth, and focusing on our assets that we believe will create the most value as we invest in them to grow. Demonstrate by our performance, and these strategies are working. We have assembled a strong team with cannabis, consumer packaged goods, beverage, and broader operational and supply chain experience that will fuel our growth this year and years to come well into the future. Most recently, Bernie Young joined us as Vice President of Sales. He is a dynamic executive with significant experience in the cannabis and the alcohol industry. He has already hit the ground running at Aphria with compelling insights and perspectives to help further our growth as we consistently enhance our competitive position in both the adult use and the medical cannabis industry. In addition, Denise Faltichek has joined our team, bringing a tremendous depth of consumer packaged good experience, particularly in the natural organic industry. Over her career, she has led teams to complete over 50 acquisitions while accelerating top-line growth, profitability, and generating value for our shareholders. She will work with me on our global strategic alliance, including future strategic partnerships in both the U.S. and international. She will also oversee our quality control and our assurance teams, as well as the medical and international businesses. We're excited to have these two talented executives on board and look forward to their future contributions. Our more than 1,200 team members worldwide are delivering on their key initiatives to fulfill our mission to be a premier global cannabis company with our medical and adult use cannabis brands. We continue to build upon our existing business fundamentals and capabilities, streamline processes through technology with our new ERP systems and greater automation in our facilities, all with an emphasis on consistent execution and to drive profitability and quality. At Aphria, we strive to be better in all that we do, so we can further our industry-leading position. We have compelling brands for patients and consumers across broad demographics, and our team is always working to further brand development. We believe we can increasingly connect with consumers through our brands, positioning them to drive growth through innovation and return value to our shareholders. As the cannabis industry continuously evolves globally, at Aphria, we're also evolving at rapid pace to ensure we stay ahead by leveraging our core capabilities. In Leamington, we enhanced our operations team to generate improved quality and higher yields at lower costs. We have a great video available on our website to illustrate the increased automation at our state-of-the-art facilities. At Aphria One, we are fully licensed and planted with nearly 600,000 plants. Our 100-acre Aphria Diamond Premier Greenhouse featured 1.3 million square feet of production. The facility is fully constructed and ready to be operational. We have been working proactively with Health Canada to secure licensing for the facility. The team at Health Canada has gone above and beyond to work through Aphria Diamond's license process, particularly since the end of June. On Friday, we were advised by Health Canada that they're in the process of expediting the issuance of the license. We're excited about the tremendous growth opportunities we will have as a result of expanding our total annual domestic production capabilities in Canada to 255,000 kilograms. We look forward to addressing industry-wide supply constraints with our expanded production capabilities. In addition, we remain confident we will obtain our EU GMP certification for bulk and finished product in the first half of this fiscal year, enabling us to export product to meet the growing demands of the European and South American markets. Today, Aphria has 5 high-quality brands, including Soleil, RIF, Good Supply, Broken Coast, and our Aphria Medical brand. Aphria's success will continue to be driven by our differentiation portfolio of brands and products aimed at delightful, distinct consumer segments. In fact, our adult use brands continue to receive industry-wide recognition. Aphria brands continue to gain momentum in the Canadian marketplace. According to OCS data, we've reached a 12% market share. That is excellent. We were able to gain a significant amount of share during the quarter from our competitors, driven by brand awareness, nationwide distribution, and the quality of our products. Now that Bernie has started, just think what else we're going to achieve. Broken Coast, our industry-leading premium craft products, continues to be among the only brand consumers consistently ask for by name in the industry. We believe over time, our Broken Coast brand has the potential to be the #1 premium brand in Canada. Soleil continues to appeal to new consumers. It ranks #3 in the non-flower category. And Soleil's CBD oil, Soleil Free, is consistently ranked as a top seller according to the OCS. Good Supply entered the market later, and despite a smaller SKU count, has already shown great momentum for the enthusiastic heavy user looking for a great product at great value. We expect momentum to continue with these brands. We believe the quality of our brands remain unmatched in the industry. We put patient and consumer needs at the forefront of our strategy. As regulations change, we will be proactive on our portfolio of brands and products. To this point, our entry into new product markets will be done in a strategic and thoughtful manner, where the best opportunities exist for differentiation. This includes vapes, as I previously mentioned, as well as edibles, teas, beverage, and topicals. We believe the expected legalization of vapes and concentrates will create a significant opportunity in the Canadian market, providing more choice and new experiences, while opening the door to a range of new consumers and new products. In Canada, we're excited to bring our premium cannabis extracts to disposables, 510s, and the Tax Era device and platform. I want to address some of the concerns surrounding vapes. The news coming from the U.S. is something we're continuously monitoring. Our number one priority is always to protect the health and safety of our patients and consumers by ensuring we only sell high-quality cannabis products. It's our understanding that these illnesses are linked to products coming off the illicit markets, specifically cutting agents and other additives in the oils, as well as faulty hardware versus the cannabis itself. This is why a continuous education and having a regulated market is so important. Patients and consumers need to be confident the products and the brands they are consuming comply with quality and safety regulations, and we will ensure that is happening. In addition to our quality assurance and our management process, we've taken appropriate precautions, including only working with reputable suppliers, launch a platform mandate to provide education to Canadians about all forms of cannabis that are available now and in the future. Health Canada has shown great leadership in establishing a regulated market that puts safety first, and we'll continue to work closely with regulators as regulations evolve. We will continue to collaborate with a growing roster of strategic innovation partners such as PAX, Nanomolecular Science, Rapid Dose Therapeutics, as we pursue new technologies and delivery systems that will change the way patients and consumers interact with cannabis in the future. Internationally, we're very pleased with the process we have made since being granted the maximum number of lots within the German tender process. Aphria is the only licensed producer in Germany with permission to grow all 3 strains of medical cannabis approved by the German authority. In Colombia, we are in the final contract stages for a greenhouse facility that will have GMP cultivation and processing capabilities. This will soon enable us to play a leading role in the local market, as well as to develop low-cost export opportunities across the Latin America region. We are also committed to supporting and enabling the medical community through our exclusive partnership with Colombia Medical Federation, a highly respected organization with direct access to over 70,000 doctors and medical professionals. We plan to host our first event with speakers from the medical cannabis industry worldwide in November. With more than 650 million people in LATAM, we believe there is an incredible opportunity. In Buenos Aires, we're working with Hospital Garan in the region to collaborate on a clinical study focused on children with epilepsy. We are honored to work with them as we learn more together about how CBD-based products could become a large part of patients' healthcare regime. In the U.S., we're focused on building strategic partnership and alliances for growth with an emphasis on the CBD market until medical cannabis is fully legalized. We believe Aphria can generate strong growth in the U.S. over time. If we look to the future, we continue to believe Aphria will be a consumer packaged goods company, and with that comes plenty of options for us in the U.S. market, which we know greatly. Last but certainly not least, as we continue to deliver on our commitment to give back to both people and the planet, we launched Planet Positivity, a new component of our corporate social responsibility strategy. Plant Positivity champions the incredible power that plants have in overall well-being and provide great access to green spaces for communities. Aphria is increasingly well-positioned with the right team, global infrastructure, strategic initiatives, production capabilities, and capital to support our growth in fiscal 2020 and well into the future. We have great momentum in Latin America, including Colombia, Argentina, Paraguay, and Jamaica, as well as Germany, and across our international markets as we continue to strengthen our global footprint. Together, the team at Aphria has entrepreneurial culture that is grounded into accountability. We're all working together towards our corporate objective of generating 1 billion Canadian run rate by the end of calendar year 2020. And with that, margins will continue to improve to fuel profitability and cash flow. We believe the opportunities for long-term shareholder value creation are very strong, both in Canada, U.S., and internationally. I would like to thank our board of directors, as some of them will not be seeking re-election at our next AGM. I also like to thank my leadership team and my direct reports for all their help getting us to where we are today and their continued dedication to moving this company forward. With that, I would now like to turn the call over to Carl.
Thank you, Irwin, and good morning. Please note, all financial references are in Canadian dollars unless I mention otherwise. As Irwin discussed, in the first quarter, we continued to execute on our growth initiatives and prioritize profitability as we continue to position our business for long-term growth and success. We are pleased with our financial results, particularly our cannabis revenue growth, sequential positive adjusted EBITDA, and our ability to maintain a strong balance sheet and cash position. As a result, we remain on track to achieve our fiscal 2020 guidance. This speaks to the strength of our team and the strategic initiatives we are working together to execute every day at Aphria. Focusing on our capacity, our Aphria 1 facility is fully licensed and planted, and as Irwin mentioned, we have been advised that Health Canada is in the process of expediting the issuance of a Aphria Diamonds license, keeping us on track to achieve our annual production capacity. Moving to our financial results, we are pleased with our first quarter results, particularly our continued increase in cannabis sales and our profitability improvement. Net revenue in Q1 increased 849% over the prior year period to $126.1 million. Compared to Q4, cannabis revenue increased to $30.8 million from $28.6 million. Distribution revenue was above our expectations for the quarter, but showed a slight decrease from $99.2 million to $95.3 million in the quarter. The slightly lower distribution revenue for Q1 from Q4 is associated with a conscious change we made in CC Pharma's business strategy to maximize profitability after recent changes in the German government's medical reimbursement model. As a result, we are pleased to report CC Pharma has successfully navigated the change in that reimbursement model, increasing its gross margins and EBITDA in spite of the governmental changes. The entire CC Pharma team is working to further implement the change in strategy, as well as preparing the business for the importation of EU GMP certified cannabis from Canada. Facility additions are well on their way, and they already have pharmacies reaching out for pre-orders. We look forward to supplying Germany's first domestically grown medical cannabis in late calendar 2020 from our new cultivation facility in Norminster. The entire Aphria team in Germany is focused on positioning Aphria with the most comprehensive license in the country as a dominating force in the German cannabis market. In Canada, we experienced a small fire at our Broken Coast facility in British Columbia that impacted cannabis revenue during the quarter by approximately $1.5 million that will be made up in the balance of the year. Our team, led by Graham Holefield, did a tremendous job to act swiftly and quickly resume full operations in just a few short weeks. The amount of effort that went into reopening the facility was phenomenal. We continue to believe we have tremendous runway for growth with our Broken Coast brand of cannabis products. The company sold 5,969 kilogram equivalents of cannabis in Q1, up 7% compared to 5,574 kilogram equivalents. Adult use cannabis accounted for 3,317 kilogram equivalents, and medical cannabis accounted for 1,354 kilogram equivalents. Adult use net revenue increased 8% from the fourth quarter of 2019 to $20 million, despite the fire at Broken Coast. The average selling price of adult use cannabis, inclusive of excise tax, increased to $6.02 per gram in Q1, compared to $5.73 per gram due to a more profitable product mix. The average selling price of medical cannabis, inclusive of excise tax, decreased to $7.56 per gram in Q1 compared to $7.66, primarily related to a higher percentage of total medical sales coming from Aphria. During the quarter, our cash cost per gram increased from $1.35 last quarter to $1.43 as we continue to ramp production in our facilities. Included in this figure is 20 cents a gram related to the strategic decision to allocate flowering space to mothers to facilitate the ramp up of our Aphria Diamond expansion. We expect this temporary increase to continue until the Aphria Diamond expansion is fully planted. Our all-in cost per gram increased from $2.35 a gram to $2.52 a gram, largely for the same reasons. Adjusted cannabis gross profit increased slightly to $15.3 million from $15.2 million. Adjusted cannabis gross margin was 49.8% in Q1 compared to 53%. The decrease was primarily due to lower sales of higher margin items due to the Broken Coast fire and temporary higher cost per gram. Adjusted distribution gross profit decreased slightly to $12.2 million from $12.3 million in Q4. Adjusted distribution gross margin increased to 12.8% compared to 12.4% in Q4. SG&A costs in Q1 decreased approximately $20 million compared to the prior period. The decrease in SG&A was primarily due to the prior quarter, including $19.5 million in transaction costs, primarily associated with the issuance of the senior convertible debenture. A decrease of $3.9 million of general and administrative costs, all partially offset by an increase in share-based compensation and amortization. Our first quarter was profitable for the second consecutive quarter, with net income of $16.4 million or 7 cents per share, compared to net income of $15.8 million or 5 cents per share in Q4, and a net loss of 9 cents per share in Q1 last year. The consolidated adjusted EBITDA in the first quarter increased by $0.8 million to $1 million, based on adjusted EBITDA from cannabis operations of $1.3 million, adjusted EBITDA from distribution operations of $3.9 million, both partially offset by an adjusted EBITDA loss from businesses under development of $4.2 million. The increase in adjusted EBITDA is primarily attributable to cost containment strategies employed at our businesses under development, and was our second consecutive quarter of positive adjusted EBITDA. Our team remains intently focused on future profit growth. Moving to liquidity, we continue to have a solid cash position and strong balance sheet. As of August 31st, 2019, the company had near cash of $464 million available for use, and over $500 million of pro forma cash when including the receivable related to our settlement with GGB. This amount is more than sufficient to fund previously announced CapEx, working capital, and strategic investments. In the first quarter, the company used approximately $100 million of cash in the business. This amount was unusual and is not representative of future quarters. Cash outflows in the quarter included approximately $35 million for the final earnout related to our CC Pharma acquisition, an important part of our German strategy, $5 million of one-time payments on our long-term debt, $30 million of CapEx, and a $15 million increase in working capital supporting our increased production capacity. We anticipate a much lower CapEx in the second quarter, somewhere between $20 and $25 million, depending upon the timing of delivery of equipment purchases. Further, we expect lower working capital requirements beginning in Q2. Going forward, we expect to generate solid cash flow. We believe this future cash flow, when combined with our existing cash position and strong balance sheet, will support our growth initiatives in both Canada and internationally. Turning to our outlook for fiscal 2020, we continue to expect to report net revenue of approximately $650 to $700 million, with distribution revenue representing slightly more than half of the total net revenue. In addition, we expect to report adjusted EBITDA of approximately $88 million to $95 million. Applying our average selling price to our future production capacity, we continue to expect annualized revenue of $500 million in Canadian cannabis sales once all facilities are in full crop rotation, and 2, annualized revenue of $1 billion in Canadian cannabis sales by the end of calendar year 2020, both of which strengthen our position as a leading global cannabis company. In summary, at Aphria, we have the greenhouse space, cultivation expertise, extraction capacity, automation technology, differentiated brands, product innovation, and raw materials to position us for success. And as we gain scale, we will gain efficiencies in Canada. Those efficiencies will allow us to build out international distribution for our medical and adult use cannabis. We are pleased with our financial results this quarter, and we continue to execute on our strategic priorities to be a stronger, more profitable company. Aphria has a long runway of growth ahead. We are confident in our ability to create long-term shareholder value. That concludes our formal remarks. Irwin and I are now available for your questions. Operator, back to you.
Thank you. As a reminder, to ask a question, please press star, then the number 1 on your telephone keypad. To withdraw your question, press the pound key. Please limit yourself to 1 question and 1 follow-up question. Your first question comes from the line of Owen Bennett with Jefferies. Your line is open.
Morning, guys.
Morning, Owen.
Yeah, just a couple of questions from me. First of all, on the guidance, so capacity looks like coming online as expected, with Health Canada expediting Diamond now. I was just wondering, what sort of industry growth do you need to see, or are you planning on those assumptions to hit that 650, 700? And then maybe if you could give a bit of colour in terms of how you see the mix between flower and new derivative products in that 650 to 700. And then my follow-up is just any more colour around the US. You briefly mentioned partnerships and alliances for growth. Are we expected to hear something around the US anytime soon? Thank you.
Okay, that's like the multi-part question. So let's deal with it in steps. In terms of the split between dried flower and the new derivative products, we've been on record multiple times. We think that dried flower remains a predominant share of the market going forward, but that the vape category and the new derivative products start to take a significant amount of market share fairly quickly. Our internal models are really based around 60% market share for dried cannabis, 20 to 30% for vapes, and the remainder being split between drinks, edibles, and the other new product formats. In terms of growth within the industry itself and our ability to make our guidance, we see a couple different things. One, we see our ability over the last few quarters to steal significant amounts of share in the space, driven by the strength of our brands. We're consistently hearing from the individual store owners, more and more people coming in and asking for our individual brands, and the sales capabilities we have today are we're really driven by the amount of supply we have. And as supply frees up, we see being able to steal more space on the shelf and be able to steal more share. We do have some growth forecasted in our number for new store openings, We recently saw that Quebec has made an announcement. We see Ontario's got some new stores coming on. Obviously those new stores and their ultimate opening will impact that. But as of today, with the information we have, we believe those will help drive that number as well.
And just on that, our brands have only been around less than a year, and the awareness that the team has built, and this is an industry that's tough to build brands because you're not allowed to advertise the brands. So it's getting the consumers to try and repeat sales. So I come back and say, just think if our brands are around for 5 years, consumers then start to know our brands, know the quality of our brands, and why it's much better to be buying our brands at retail outlets than be buying products in the illicit market, and that's the biggest opportunity. 25% of sales only comes today from recreational products that are sold in stores. The big opportunity for us is how we continuously take away sales from the illicit market. So, and as Carl said, Canada expects to have over 3,000 stores within the next 3 to 5 years, and with 1,000 here in Ontario. So just by additional store expansion, additional products, and us with our brands out there creating brand awareness and educating the consumer, the value of buying the brand in the store instead of the illicit market will drive our sales. Also, there's a big focus here on medical. With Denise joining us and taking over our medical business, we think there's a lot of patients that we can add to our medical database there, so the opportunities there are tremendous. In regards to our U.S. growth, spending 25 years building a consumer products company in the U.S., we are talking to multiple partners in regards to strategic opportunities. And as that strategic opportunities now with products that we would look at today that have the potential to be converted to CBD or THC or medical when ultimately it becomes legal. What I've seen is this year, there's a lot of partners that want to jump into it. And what I want to make sure is, the partners want to join Aphria or partner up with Aphria because they come back and they look at our facilities in Leamington. They look at what we're doing in regards to vapes. They look at what we're doing in regards to drinks and edibles. And all that research has been done. So that's the kind of partners they want to do. So there's going to be a lot of opportunities for us. I think the wrong strategy was jumping in too soon, because when you jumped in too soon, you don't know when legalization is going to happen. You don't know if it's just going to be medical. You don't know if it's rec. And they're still out there with the FDA and the USDA trying to figure out in regards to CBD. So I want to make sure when we do it, we got a plan. We know what products. We know what's legal, and we know if it's all the U.S., certain states, or if it's just medical. So absolutely, the opportunity's there, and we're working on it.
Cool. Thanks, guys. Very helpful. Appreciate it.
Thank you.
Your next question comes from Brett Hundley with Seaport Global. Your line is open.
Hey, good morning, guys, and congratulations on this quarter. Carl, thank you for giving the expectations on working capital and CapEx for Q2. If I can press you a little bit, can you give us a sense of how your cash burn might trend beyond that? So I guess at a high level, we would expect cash burn to drop down in Q2 relative to Q1. At a high level, would you expect it to flatline for a couple quarters there, or should we see continued drops thereafter?
For the next few quarters, I think the flatline plays out more. We still have investments to make in Germany and Colombia that are announced. And then once we go through those pieces, that you'll start to see the CapEx component of that number come down. We don't anticipate any major changes on the financing side in terms of debt repayments. And we will have a little bit of a working capital increase as Diamond comes online, but the majority of the working capital increase for Aphria 1 has already been incurred.
Thank you. That's helpful. And then following on to Owen's question about guidance, I want to dig in on the other part of guidance, which is EBITDA, and really get a sense of how fit Aphria is going forward in coming quarters here. You know, I know you guys are optimistic. Some of us on the other end of the phone have become more pessimistic about the Canadian market up ahead. When you look at your EBITDA range of 88 to 95 for fiscal 20, can we talk to some of the stress tests that you might have put in place around this guidance? Some of the broad themes or underlying assumptions within this range so that some of us on the other end of the call can get comfortable of how you're modeling that range for fiscal 20, given all the moving parts that surround the industry right now. Thank you.
Yeah, so I think the best way to answer that is, you know, a big chunk of those increases in EBITDA are being driven by the increased capacity coming online with the Aphria Diamond and the cost expectations we have for growing product in that facility. If you look at all of our expansions and have visited our facility, you'll know that the Aphria 1 facility is set up in 5 different parts. And as we've moved from part to part, we've refined and we've changed how we grow and we've changed how we set up. But when we built Diamond, we took the best we took the best that we had, and that's how we organized Diamond. And so you've got you've got smaller expectations on costs and bigger amounts of gross margin flowing through that facility as a result. We are sitting at a cash cost of $1.35 in the quarter, and $1.43 in the quarter, and we're expecting below $1 as we ramp into Diamond and get that fully operational. The scale that we get from our facilities drives out a number of costs at Aphria 1. We're still in the process of ramping up that facility. Its capacity was at 55,000, its ramp was at 55,000 at the end of the quarter. We've built pieces into the model through our EU GMP and our expectations on our ability to transfer product from Canada and start moving that internationally. And so as some of the demands in Canada, as some people are expressing some expected slowdown, we have the capability of moving that product from Canada to international opportunities at higher prices. That's built into those models.
Thank you.
Your next question comes from Krim Krendler with 8 Capital. Your line is open.
Yeah, hi, good morning, and thank you for taking my questions. I don't mean to harp on the guidance point here, but just with respect to the stress test, one element, specifically from the retail side of things, I understand there's been a lot of success in stealing share at this point in time, but just wondering what the thoughts are with respect to opportunities for sell-through, given the Ontario retail situation has been pushed back a bit. I know there's been some commentary out of Quebec to increase that, but just wondering how any bumps along the way with respect to some of these key markets at retail could affect that outlook as well. Thank you.
So hi, number one, I think goes back to what I originally said. The opportunities for us in the retail market with additional stores opening up is tremendous. And I think, in the Ontario market, if it was 25 stores, the majority of the year it was a lot and sold online. I think there's lots of change coming to the Ontario market. Is it going to be shipped direct to the stores, etc.? But the key to all this is having good products with good brands and good pricing. And that's why we've built out under Bernie the infrastructure and the sales team to get out there and make sure we got the right displays where we're placed in the stores. We got the right products, and working with the individual stores and the retailers to ensure that they know the Aphria brands, whether it's Soleil, whether it's Rift, whether it's Broken Coast. And I think at the end of the day, this industry is just a year old, and the important part for us is that we have supply, and that's been the biggest challenge we've had all year is supply. And with Aphria Diamond ultimately coming on and having over 600,000 plants, we will be able to have supply. Last but not least is being that producer of quality products. is going to be important to us, and also that producer of quality products at a lower cost. And ultimately, Aphria with its brands, its products, its ability to ship, its infrastructure with sales organization, its infrastructure with its marketing group and building brand awareness, we feel good about achieving those numbers and winning over the consumer.
Okay, appreciate the color there. And just for my follow-up here, with respect to the ramp of that on the guidance for the fiscal year, with the average revenue growth, if my math's correct, looking like it needs to be something around 60% a quarter, is it fair to say that much more of that growth is expected towards the latter half of the year, considering where that's going to fall in terms of the rollout with derivatives?
And that is all with Diamond coming on board, rolling out on edibles and vapes, etc., and continuously expanding the distribution and more stores opening up.
Okay, thank you.
Thank you.
Your next question comes from John Zamparo with CIBC. Your line is open.
Thanks. Good morning. I wanted to stick with the guidance as well. I appreciate the color you gave Carl on future expectations of market composition, but can you say what percent of that 88 to 95 million comes from derivative products specifically?
We haven't publicly released that.
Okay, maybe
I think it's important. I think it's important that we're committing to our recreational products and growing our distribution and growing our brand and our products, but not to break it down, and we haven't broken it down by product line or category.
Okay, understood. Thanks. So my follow-up's on the Aphria contract. I know you said in your press release this was immaterial. Just to clarify, though, is none of the original EBITDA guidance including contributions from that contract, or is it that you assume you'll find new buyers? And assuming it's the latter, what is it you assume on wholesale versus retail for that product?
So, number one, the Aphria contract was a legacy agreement. It was built into our absolutely guidance, and we expect to replace that with retail customers and other products to support those sales that we wouldn't have got from Aphria, and at better prices and better opportunities out there within both flower and oil prices.
Okay, thank you.
You're welcome.
Your next question comes from Matthew Bonnelly with Canaccord Genuity. Your line is open.
Good morning. Thanks for taking the questions. Just want to circle back on sort of the vaping headlines we're seeing in the U.S. I think a lot of us have at least a high-level understanding as to what some of those issues are, and I know, Irwin, you spoke to them, but I imagine this is a bit of a PR issue for Health Canada and the federal government to have to navigate in this launch. So is there any color coming from them with respect to what they might be communicating to the public, and if they might slow down the potential flow through to the retail stores of these products? Or are they completely agnostic to the whole issue as it stands right now?
So we have not heard anything from Health Canada, and I think Health Canada has said, they'll continue to evaluate. But again, what I've said is this here, I think, what we want to ensure is the safety and quality of our products. And I think all indications so far, this is coming from vapes that are purchased through the illicit market. It's coming from products that are adulterated. It's coming from hardware that's never gone through quality testing. This comes back and just shows why it's so important for regulation. This is important, why it's so important to have brands and quality products, because the consumer knows that they're getting a product that is safe, that the hardware has been tested, and the product they're getting has been tested. So, we don't like to see sickness, we don't like to see illness, and we don't like to see, anything bad happening from vaping. But I think this comes back and just shows why consumers need to be buying products at approved retail outlets and buying it from approved, suppliers that have gone through the quality here.
Okay, thanks. And just to follow up maybe for Carl, just going back to the fiscal 2020 outlook again, I know there was a lot of commentary given this quarter and prior quarters on where you are in your overall build out in order to achieve those numbers. But overall, if you were to assume the Canadian retail rollout goes horribly, just for the sake of argument, how much leverage do you have to put that distribution into international channels to better hit those numbers? So I guess a simpler way of saying it is, if the Canadian market completely erupts on you, how sensitive is your 88 to 95 there?
We have the ability to move product through international markets once we have the EU GMP certification. We have significant demand through our operations in Italy, Germany, Colombia, and Argentina, and those are just our customers. We're also receive on a daily basis emails from people wanting to buy product from us internationally that aren't our actual own subsidiaries. We're very confident in our ability to divert product from Canada to overseas market in a downside scenario.
But just on that, I think, again, as we see the rest of the world international being, legalized in medical, the GMP certification opportunity for us is well within the hundreds and hundreds of millions of dollars. And today we're selling minimal, product there. So that is a big opportunity. But, just to come back, I am confident with the Canadian market ultimately, and I see the opportunity in this Canadian market only being legalized for just less than a year. And as I said before, having these brands that are new to consumers, and there's a major market today that can be taken away from the illicit market of $4 billion. That is where the opportunity is, and that is where we've invested, and that's ultimately where Aphria will, get to that $1 billion mark. We'll be able to generate a tremendous amount of EBITDA and be able to generate a tremendous amount of cash.
Okay, thanks, guys.
Thank you.
Your next question comes from Justin Keywood, GMP Securities. Your line is open.
Good morning, and thanks for taking my call. Just on the 12% market share mentioned, what was that up from the prior quarter, and how would that rank overall? Like is it first, second, or third?
So it's up 4 points from the prior quarter, and from a ranking standpoint, I'm not sure what you mean in a ranking standpoint.
But like as far as the total market share, would that be like second, third, or would that be like first as far as leading market share?
You mean as a company, as a brand, as a product? I'm not sure what you're asking me.
So if it's 12% of the market, like who would hold the first market share? Like would that comprise of 15%?
So as you heard, we only have access to Ontario data. We don't have national data.
Okay.
But Ontario being the biggest market is a good indication for the rest of Canada.
All right. Maybe just another question. What percentage of market share do you assume in your guidance?
It's still growing from the 12% in Ontario.
Right. So right now we only have data on the Ontario market, and again, as I said before, with that is number of stores that are open today, with the number of stores that will open. We should only increase market share, over the next 3 quarters for us, or 2.5 quarters.
Okay. And in your guidance, do you have a target number of stores that you anticipate to be open by then?
We do have a certain amount of stores. Do we have it down to a science by timing and date and stuff like that? No. I think there's a couple ways we're looking at it. We're looking at our supply and supplying our current stores, new store openings, and new product lines that will roll out during the year.
Okay, thank you for taking my questions.
Thank you very much.
There are no further questions queued up at this time. I'll turn the call back over to management.
Thank you very much, everybody, for listening to our call today. As you heard, our last 2 quarters, there's a lot of things happening at Aphria, and with that, we'll continue to do that. I'm excited in regards to our execution I really got to come back and say thank you to our team members of 1,200 around the world that have been working endlessly to get us to where we are. I want to thank our board of directors for their support. As I said, some of them will be leaving us at this AGM and not rerunning. Thank you very much to them. Listen, this is a new industry. It's, like I said, 1 year old Thursday. And there's been a lot of stops and starts and a lot of starts and stops. And with that, there's a lot of opportunity here. I come back as I spend a lot of time on this and coming out of the consumer packaged goods industry for 25 years, I do see a lot of, similarities, but I come back and see there's a market out there, $5 billion that is sold in both the illicit and the recreational. And our big focus and strategy has to be how we gain consumers' confidence and how we gain consumers' awareness of our brands, that they're going to buy from retail stores and going to buy our brands and products and not be buying from the illicit market. Secondly is this here, is we expand our product portfolio and come out with new products and quality products. And products that are well priced is something that we will continuously do, and the marketing teams and the sales teams today are working together. One of the big things in my old world, we had Nielsen numbers, we had IRI numbers, and we don't have that data at our fingertips today. And with that is data and content. And we are building around analytics. We are building around, AI and building our products. And important is the processes that we have in place. A year from today, this will be a totally different industry than it is today. And that is, the packaging that we'll bring into play in regards to sustainability, the products that we'll bring into play. But what I can reassure you is our focus is on quality, our focus is on safety, our focus is putting out great products out there. Our focus is on educating the consumer and ensuring these products are in the hands from a recreational standpoint to the right consumer. Our focus is to make sure if we're putting out vapes or drinks, there are quality products. So with that, I'm excited about where Aphria is going. I'm excited, ultimately to get our license at Aphria Diamond that will give us adequate supply of 255,000 kilos. I'm excited about the opportunities with our medical business, and that's an area that we had not focused on over the past year, and it was more on the rec side. But now that will be a big focus for us, and I really see the opportunity on a global basis as we bring our medical businesses together, and we see the opportunities learning from patients all over the world. As I said, I was down in Buenos Aires a few weeks ago and was working with one of the hospitals where we have been, and what we're seeing is young patients having 300 plus seizures a day in epilepsy, and administering CBD to them, seeing their seizures go down to zero. So there's a lot happening both from the medical, from the rec, from the new product, from the grow standpoint, the processing. The other big thing is those that have been to Leamington, at certain times, what's happening there from an automation standpoint, and just in our pre-rolls where we're doing 4 a minute, we now have automation in that facility where we're doing 5,000 an hour. So we'll continuously evolve on our processes, our automation. As we were going through scripts and presentations last night, we were talking about packaging. Last year, this time, we were paying $3, $5 for a certain amount of packaging that came out last year when products come out. We continuously come back today and are looking at new sustainable packaging that are, we're purchasing for less than $1 today. So a lot has happened in a year. There's a lot of movement and tremendous amount of change in Aphria. And my objective is with this team that Aphria becomes the #1 leading global cannabis company around the world. Thank you very much for your time. I hope everybody had a great Thanksgiving, and we'll speak to you again soon.
This concludes today's conference call. You may now disconnect.
There it is, folks. There it is. Thank you guys for watching on YouTube and on LiveMe. Markets are green. Aphria did what they were supposed to do. They took over number one spot in Canada for revenue, net income, EBITDA. They are the biggest right now. They're the best in Canada. Clearly, they're doing it the right way. They're profitable. They've got EBITDA. They've got a net income. And they've got growing revenue. And the revenue growth in 1 year, 800% in 1 year revenue growth is so big. I can't explain. From 13 million last year, I remember sitting in this chair listening to their conference call last year when they showed 13 million in revenue to 126 million a year later. I don't care how much of a hater you are. Everybody knows that 800% revenue growth year over year is spectacular. That's why I love this sector. I love this industry. We have so much upside. It's absolutely incredible. And the fact remains that as of Thursday, we will be legal for 1 year in Canada. We're still not legal in America and most of the world. This is just the beginning, just the start. And I really have no time for the bashers and the haters, because the reality is there's so much room for growth from here. And we are watching companies that are growing by hundreds, if not thousands of percent per year in revenue growth. I can't wait to see what 2020 holds. 2019 has been a roller coaster ride, despite the fact that these companies consistently grow their revenues, consistently are growing their profits, and we now have quite a few companies that are profitable in the entire sector. And honestly, today's the last day that I want to hear people talk nonsense and hate. So let's just eliminate all the haters out of the group chat. There you go, you gone. Because there's always going to be haters, right? There's always going to be shorters that are getting squeezed tight this morning and they're going to start to panic. But it's okay. It's okay. That's a war in the markets. Thank you, Aphria, for reporting great numbers. Thank you, Aphria, for all your hard work and commitment to excellence. Congratulations on your success. This is Rich from Rich TV Live on YouTube, live on LiveMe, with the Aphria revenue report, first quarter 2020 results. If you're not winning, you're not watching. We bring the winners and we bring them to you first. It's true. It's your boy Rich from Rich TV Live, and I'm Mo. Peace. Have a great day, green day, with your green gold. I'm Mo.